What if I told you that the bear market, that financial avalanche we all dread, doesn't actually begin with a crash? Oh no, it starts much earlier, silently, quietly, when the chart's still looking green and euphoria fills the air. It begins when nobody's paying attention. And the worst part, by the time most people finally realize what's happening, it's already too late. But what if you could see it coming? Not with a crystal ball, but with the real data. Clear signals. What if you could actually catch the quiet signs, the little shifts before it all explodes into a full-on crash? Because smart money doesn't panic. They don't freak out when prices drop. They stay ready. They use real tools like on-chain data, macro trends, even small signals from social media. And today I'm going to show you 5 simple tools that can help you spot a bear market before it happens. Let's get into it. In crypto, things can flip fast, sometimes just from one tweet. That's why spotting early signs is so important. It's not just about avoiding losses, it's about catching the next move before everyone else. So let's break it down and look at the key signals you need to watch. All right, let's start with one of the most important indicators out there, Bitcoin's 200-week simple moving average, or SMA. Now, I know that sounds technical, but stay with me here. This line isn't just some random chart indicator. It's like the market's long-term health check. Here's the deal. When Bitcoin is trading above that 200-week line, it usually means we are in a strong, healthy bull market. It shows long-term confidence, but here's the part you really need to pay attention to. In both the 2018 and 2022 bear markets, Bitcoin fell below this line and stayed there for a while. That's not just a price dip. That's a market shift. It's that slow pullback before the big drop. Smart investors watch this line carefully because when it breaks down, it's often the first real sign that a bear market has arrived. Tool number 2 brings us to the human side of crypto, the Fear and Greed Index. It sounds simple, but it's actually super powerful. This tool pulls data from all over, trading volumes, social media, volatility, and gives us a score between 0 and 100. 0 means total fear, 100 means full-on greed. So why does this matter? Because crypto is driven by emotions, a lot of it. When that number hits extreme greed, people are chasing pumps. FOMO is everywhere, and that usually means a correction is coming. But when it hits extreme fear and everyone's selling in panic, that's often when the best investors are buying. It's not about following the crowd. It's about understanding what the crowd is feeling and doing the opposite. Next up, one of my favorite tools, on-chain metrics. This is where we go deep, real-time blockchain data. No opinions, just facts. Let me break down what you want to look for. Active addresses and transaction volume. If fewer wallets are active and transactions drop off, it usually means the market is cooling down. Fewer people are using the network equal red flag. Minor capitulation. Miners have big costs. If they start selling off their Bitcoin, it's often a sign they're struggling or expecting price to drop further. When coins that haven't moved in years suddenly get transferred or sold, that's not random. That can be a warning sign. OGs taking profits or losing faith. These on-chain signals doesn't just show price action. They show conviction or lack of it. And that's priceless. Tool number 4 is all about watching where the money is moving. Stablecoins like USDT and USDC are basically the cash of crypto. So if you see tons of stablecoins leaving exchanges, it usually means people are cashing out, maybe getting ready to sit on the sideline. But if you see a spike in stablecoins entering exchanges, that's often a sign they're preparing to buy. Same with Bitcoin or ETH balances. If people are moving their crypto off exchanges, it usually means they are planning to hold, not sell. But if coins are flowing onto exchanges, that's extra selling pressure. This tool is like checking the market's bank account. You'll know whether money is gearing up to buy or run. And finally, tool number 5 takes us beyond crypto into the bigger picture. Global interest rates, inflation, regulation, these things all affect how people treat risk. And crypto is one of the riskiest assets out there. So when the Fed raises rates or inflation spikes, people start pulling money out of crypto and into safe assets like bonds. And don't forget regulation. A new law, a crackdown on an exchange, or just uncertainty in the US or Europe that can scare the entire market fast. Smart investors always keep an eye on the outside world, because even if the chart looks good, the macro winds can change everything. So let's recap real quick. Bitcoin's 200-week moving average, your long-term trend check. Fear and greed index, your emotional read on the crowd. On-chain metrics, raw blockchain data, not just price. Stablecoin and exchange flows, where the money is heading. Macro and regulation. The big picture pressures you can't ignore. These 5 tools, they are not just charts and signals. They are your early warning system. When you use them together, you're not chasing the market anymore. You're reading it, and that will help you a lot. Trust me. Please use these tools. They are the same one pro traders rely on to survive crypto winters. Drop a comment below and let me know which tool you're going to start using today, or which one you're already using. What do you like about it? Has it helped you? I'd love to hear your take. I'm Lamia. Thanks for watching, and I'll see you in the next one.